Hi learners, in this video you are going to learn CVP analysis for a single product. Using this data, I will show you different formulas of CVP analysis. First of all, we will calculate contribution margin per unit. It is the excess of sales price over variable cost. Therefore, the formula will be selling price per unit minus variable cost per unit. Sales price is $100 and variable cost is $60 as given in the data. Therefore, the contribution margin will be $40. Next, we will calculate contribution margin ratio. It is also known as PV ratio. The formula of contribution margin ratio is contribution margin upon sales. It shows the percentage of revenue available to cover fixed cost and profit. Contribution margin is $40, sales price is $100. Therefore, the contribution margin ratio or PV ratio is 40%. Next is break-even point in units. At break-even point, profit is equals to 0. It means there will be no profit, no loss. Fixed cost is equals to contribution margin. The formula for break-even point is fixed cost upon contribution margin per unit. Fixed cost is $1 lakh. Contribution margin per unit is $40 per unit. Therefore, the break-even point will be 2500 units. We have calculated that break-even point is 2500 units. Now, we will prove that by selling 2500 unit, the profit will be 0. Sales for 2500 unit will be $2,50,000. Variable cost will be $1,50,000. Therefore, the contribution margin will be $1 lakh less fixed cost $1 lakh. Therefore, the profit will be 0. Now, we will calculate break-even point in dollars. It is really simple. You just need to divide fixed cost by contribution margin ratio. Fixed cost is $1 lakh. Contribution margin ratio is 40%. Therefore, the break-even point in dollar will be $2,50,000. Next, we will calculate margin of safety in dollars. Margin of safety shows the excess of current sales over break-even sales. It is given that currently you are selling 3000 units. Therefore, margin of safety will be calculated by deducting break-even sales, that is $2,50,000, from current sales, that is $3 lakh, which is equals to $50,000. Lastly, I will show you how to calculate sales required to earn target profit. Suppose you want to earn a target profit of $60,000. You just need to add the target profit of $60,000 to the fixed cost, that is $1 lakh, and divide it by contribution margin per unit, that is $40. It shows that you need to sell 1000 units to earn a target profit of $60,000. If you have any query, you can ask in the comment section. Thanks for watching.